Hey everybody, my name is Justin. Today I want to talk about my new stock purchase that I made here over the last 2 weeks. So I've hinted about this stock purchase. There was a lot of speculation out there on what I was buying. So here it is. The stock I purchased is Danaos Corporation, ticker symbol DAC. So in this video, I'm going to explain why I'm bullish about the company. I'm going to explain what the company does. I'm going to go over management. I'm going to talk about financials. I'm going to talk about risk associated with buying this stock. And I'm also going to talk about valuation. So most importantly though, always do your own research. I am not a financial advisor. This is not a recommendation to buy this stock. This is just my opinion, how I'm viewing this company. But if you get some value out of this, smash the thumbs up button. Really helps out the channel a lot. I really appreciate it. If you like this kind of content, I encourage you to subscribe to my channel. I also want to give a shout out at John at On Borrowed Time. I actually found out about this stock specifically from his channel. In fact, I was watching a video where he was talking to someone from Seeking Alpha, and some of the stuff I'm showing you in this video is from that article with the author from Seeking Alpha. So definitely go check out his video. I'll put a link down in the description. It's about 20-25 minutes long. You can find out some really great things about this company. So I want to give credit where credit is due. So definitely go check out that video. Danaos Corporation. So this company is actually a ship container company. So think of those big, massive ships that basically take cargo from one country to another country. Amazon, Walmart, all that stuff that comes from like China to the US. They're on these big container ships. Think about that big container ship that got stuck in the Suez Canal a couple months ago. That's the type of company I am talking about today. So the Danaos Corporation specifically has about 1,300 employees total. They are around a $1.5 billion market cap. They did about $400 million in revenue last year. And they're the third largest container ship company that's public in the world. Their headquarters in Greece, and they were founded in 1972. So what's going on? Why am I interested in this company? What is kind of going on here? So there's something kind of interesting that's kind of going on right now. So we have a situation over the last 10 years where container ships really haven't been in as high of demand. And so what container ship companies have been doing, they've been scrapping container ships at a high rate. On top of that, they really just haven't had a lot of capital to go out and buy more container ships as well. So we've created this situation where these ships are getting scrapped. You're not ordering new ships. So the supply of ships that are out there has been going down over the last 10 years. And then all of a sudden what happened last year, the whole pandemic obviously spread across the world. And stuff kind of came to a halt, at least for a little while, right? Everybody kind of stayed inside. But then also what happened is that as people were coming back out of their house, also when stimulus money started getting pumped back in the US economy, all of a sudden people had extra money. They're buying stuff like crazy. Well, all of a sudden these container ships, at least as of the fall of last year, are all of a sudden in really high demand. Keep in mind, they've been scrapping ships. They've been not ordering new ships. So there's less ships that are out there. The demand has gone up to the point where literally ships that would sail across the ocean before they would get to their port, and they could get in their port, within the same day, within 2 days for sure. But now there's such a backlog of ships waiting to get into port that sometimes it's taking up to 2 weeks for them to unload the containers that they have on there. So what's happening is, because it's taking longer, they can't get the product to customers as quickly as possible. Meanwhile, these container ships are able to charge more money because they're in higher demand. The demand for these products are so high, the supply of ships is not enough right now to move stuff across the ocean. And so it's creating a potential super cycle right now. So container ships, even oil tankers, they go through these bull markets, super cycles, whatever you want to call them. So in my personal opinion, I think we're seeing a start of a super cycle. So why do I say that a super cycle is starting? Obviously, I'm saying that there's ships out there waiting to get in port, there's higher demand, but we're seeing it in the ship rates itself. I think they've gone up, I think 3 or 4x here in the last 12 months. In addition, keep in mind that Danaos Corporation specifically did about $460 million last year. They're already contracted out 97% of their ships, and their contracts are already made for 2021, and they're going to be hitting around $575 million is what they're projected for 2021. That's an increase in itself, 25%. Keep in mind too, if we look out to 2022, they're already booked out $392 million worth of revenue out 2 years from now. So this is a very unusual circumstance for this industry. Another reason why I like Danaos so much, and we'll kind of get into valuation a little bit later, is that their net asset value, or also called NAV, is right now around $1.8 billion. And if you look at a share price value, it's around $95, around $95 to $100 right now. Keep in mind the stock is trading at $75. So just in that self, it's trading at a low discount right there. The company also has about 65 container vessels in its fleet, 12 different ship sizes. So they're very well positioned over the next 2 to 3 years when I think this super cycle is going to happen. In addition, the company has actually paid down about $400 million worth of debt over the last year or two. In addition to that, they've been able to restructure their debt in a way that they don't have anything mature until 2028. So their balance sheet is at least sitting pretty good right now. And as far as management goes for Danaos Corporation, they have a long tenured history of high up managers with the company. You're talking about Dr. Koustis, who's the CEO of the company. He's been with them for almost 30 years. Most of the executive team have been with the company 15 to 20 years plus, which I really like. So before we get into kind of the financial metrics and then valuation, I want to show you a stock chart right now. So this is not typically a company that I like to buy into, and the average person that looks at this would say, wow, you know, it looks like you kind of missed the boat, no pun intended there. But it was trading at $5 about a year ago, and all of a sudden now it's at $75. Are you kidding me? 15x essentially over the last 12 months. But if you look at what is going on today and the valuation we'll get into, it's actually trading cheaper today than it was 12 months ago. So let's take a look at one of those metrics right now, and that is enterprise value over EBITDA. And this specifically is what is talked about in the Seeking Alpha report, which I put a link down below for that again, so you can definitely go check that out. The author talks about Danaos Corporation is trading at basically a 6.3 EV over EBITDA a year ago, but if you do it as of today, enterprise value is about $2.2 billion. If you divide that by $530 million of EBITDA that's expected out in 2022, you're coming out around a 4 as far as that goes. So it is trading at a much lower valuation now than it was even 12 months ago. So even though that the share price has gone up almost 15x, enterprise value has only gone up 40%, not even a half X, I guess you could say. That's a good way to value this company and see what they are potentially really value now versus what the share price of the company is. Before we get into valuation, let's talk about risk as it is. So whenever I'm buying into a company, I want to know not only the good, but the bad as well. And the risk here is a couple of things. The whole tanker rates that are going on. So we've seen almost a 3 to 4x over the last 12 months. So we're expecting an increase going on into the future. We're continuing to see that. But for some reason, you have to remember there's always a customer on the other end. Right now, the customer is willing to pay higher rates for these container ships to get their product. If for some reason they were not willing to pay the higher rates, then we're going to see the rates fall and that could be problematic right there. Another potential issue is, do we see another pandemic that occurs? We saw the whole thing that happened last year. Now they're saying there's a new Delta variant. They're already talking about a couple countries that are starting to really shut off the borders, and so is that going to happen again? Are we going to see a worldwide type of problem that we saw last year as well? So keep in mind, these super cycles happen very quick. They go up very quick. They go down very quick. So for some reason, if those tanker rates were to go down, the stock would go down very, very quickly. So that's just something to keep in mind. All right, so let's talk valuation. If you watch my other stock analysis videos, I have 4 different valuation models that I go over. Now, keep in mind that the net asset value of this company currently is around $95 to $100, and the stock is trading at 75. So there alone, it is trading at a discount to that. We also looked at enterprise value over EBITDA. We can see that's gone down over the last 12 months, also indicating it's a good buy. But I'm going to do my own analysis to see what I come up with. So the first one is a margin of safety analysis. I'm essentially looking at potential growth rate, earnings per share, looking at potential PE, what people are willing to pay going out in the future, and using a discount rate of 3.2. So based on that information, I'm coming up with a buy price of $87 right now. I am using an earnings per share of 13. I think technically it's around 18 right now for the last 12 months, but I think 13 is what's expected for this year. So I'm just trying to be as conservative as possible, and also feel that, a P of 15 to 16 is probably more reasonable with this company going out over the next year or two. All right, so the next valuation I do is my 10 cap valuation. I'm basically looking at free cash flow, and then I'm trying to get to owners' earnings, and then I'm willing to pay about 10 times that on a per share basis. So based on that information, I come with an $83 valuation for the stock right now based on the trailing 12 months free cash flow. Next one I like to look at is my discounted free cash flow model. And for this, I am estimating about $250 million for free cash flow for 2021. I think it's between 250 and 300. I'm going to be conservative. I'm going to say around 250. And the growth rate that I am using is 22% over the next 3 years. We already know for 2021, they're estimated to grow 25%. I think it's going to be higher in 2022, and then we may see some pullback in 2023. So 22% going out next 3 years, and I'm saying 0% over the next 4 to 6 years, and actually a negative 5% 7 to 10 years out. So based on that, and I'm also using a 15% discount rate to kind of give me a margin of safety. I think the intrinsic value right now for the company is $91. So again, that actually is a higher price than what is trading at currently. And then the next one I want to talk about is free cash flow to market cap value. So essentially what I do is look at the last 4 years of free cash flow, take an average, and then I use a multiple against that to come up with the market cap, what I think it should be worth right now. I use a multiple of 5 to 30 depending on the company. I usually use I would say on average like a 20, but for this one I'm using a 10 because it is a cyclical. I think there's more risk than normal associated with this type of company and stock going over the next 2 years, and it is speculative in nature. So I'm using a 10 for this. So I think right now the market cap should be around $1.5 billion, and it is trading at $1.5 billion. So right now I think $75, $76 is a buy price for the company. So in a summary, margin of safety is $87 buy price, 10 cap is 83, free cash flow market cap is 76. So I have an average buy price of 82. By a discounted free cash flow, I have an intrinsic value of $92 on that. So now let's kind of talk about what my position is, what I'm planning to do going in the future, and that sort of thing. So right now, about 7% of my portfolio is in Danaos Corporation. My cost basis is around 74, 75, right in there. So I'm really willing to buy up to $85 for this company personally. So, you know, at this time, I'm good with 7%. Now, if it were to drop down to the 60s, I would probably add a little bit more. I would not make this more than 10% of my portfolio, just because there is some speculation with this on that. But those are kind of my thoughts. And I do believe that we're going to see a super cycle certainly over the next 2 or 3 years. I don't think I'm going to 10x my return or anything like that. I'm hoping for a 2x over the next couple of years. We'll kind of see what happens on that, but definitely a big shout out to John on Borrowed Time. Definitely go check out his video. It was really phenomenal. Do more research on this company. Just don't go out there and buy it. Make sure you understand the risk, understand the valuation, what's kind of going on with the industry right now. So thank you guys so much for watching. I really appreciate it. I'll catch you guys on the other side. Take care and God bless.